day like today. Thanks indeed. Well, you got the market which is holding with about a 245 odd point cut, 17,580 or so is where we are at right now. Anshul Saigal is now joining us, Head and Executive Vice President at Kotak Portfolio Management Services. Anshul, great to have you with us here. Thank you very much for your time. Good afternoon. I just want to start with, of course, the global is the global, and we are reacting to it. But what about some of the local factors like earnings, etc., Anshul? For your portfolio companies, have expectations moved down quite a bit as a whole for FY24 and beyond, or not really? Were you already conservative? Because we've heard kind of both sides. We had Sanjeev Prasad some time back saying, well, but Sanjeev is a more conservative guy, so their expectations were trending a little lower in any case, whereas others have said that they've had to lower their estimates quite a bit. So I just want to start with that earnings question, Anshul. What's your sense?
Afternoon, Prashant. Thanks for having me. On earnings, clearly what we've seen in the broader markets is non-financial companies. They've seen a decline in earnings for this quarter. And financials have really held up on earnings quite well, which is the reason that you're not seeing significant cuts at the index level. Clearly, they've saved the day for the index in this quarter. When we speak with companies, the body language suggests that come October, November, there was a weakness in the markets. That is, I'm talking on the economy side. And December, towards the second half of December, we've seen somewhat of a stabilization on economic activity. And that sustains as we speak. January, February, that sustains. Our belief is that if you're looking at short-term perspective, there is clearly uncertainty on earnings. But, say a year, 2 years out from here, India is in an extremely sweet spot. And I've never seen in the last 10 years so much forthrightness in how companies are coming out and giving confidence on their long-term prospects. Depends on where you stand on the fence. If you're a short-term investor, clearly there is uncertainty. But if you're a longish investor, then this is a sweet market to be investing in because small and mid caps, as also many large caps, have corrected anywhere from 15 to 40, 50%. So you will get opportunities in the markets.
All right, Anshul, and the opportunities are coming thick and fast. In the last couple of trading sessions, we've seen quite a decent correction, actually. And today, in fact, it's quite deep. But Anshul, I believe, that consumer durables is a sector that you like, on this sort of a dip. What do you like from that space? And if you could give us the rationale out there, point number one. And point number two is just on the headline index. Do you expect that we correct maybe 5-10% from here? Or that's about it? Or do we get deeper?
Nigel, if you look at on the headline index, if you look at the earnings estimates for FY25, Street is at somewhere close to 1,000, 1,050 on Nifty. Which means that we are trading at 17 and a half times earnings as we speak today on FY25 numbers. And those haven't in recent times been downgraded materially. Now, that while it is somewhat expensive, but it isn't really out of whack. And the second thing is that, as Seth Klarman says, that investing is the intersection of behavior and economics. Clearly, the economics suggests that we are not cheap at 17 and a half times earnings, but the behavior suggests that markets are very light. There are tremendous short positions at the end of most market participants, more than what they were, significantly more than what they were a year back. Domestic institutional investors are holding cash. FIIs have in recent times taken monies out of the markets. So markets seem light on the behavior side. The general expectation is that there is downside. If you look at both these things in conjunction, it doesn't look like there is material downside on the markets. Maybe a 5-10% volatility is a likelihood, and that remains a likelihood at any point in time. And then on your first question on consumer durables, see, if this is we are at $2,000 per capita income. China is up in the last 30 years, 36 times, and is at $12,500. US is at $60,000+. We are only scraping the surface on what the opportunity on consumer durables is. The Awas Yojana and general housing going up, Ghar Se Nal Yojana, and all these things are drivers for consumer durables, and those are catching pace. The change on the ground is quite substantial. Combine that with a hot summer this year, to us, these are all makings of a very strong consumer durables season. Air conditioners, fans, washing machines, all of those, and companies that cater to these segments are likely to be beneficiaries. So we remain positive on this space.
Anshul, sorry, you've owned these for a long time. You've added them now. I mean, after the sharp corrections.
We've added many of these now.
Okay.
We have also, we have played this cycle post-COVID as well, the home improvement cycle in general. Those stocks had rallied quite a bit. We did book a little bit of profit, and we've started adding again now.
By the way, the bulls today would be really hoping the market closes quickly. I mean, we still have about little over 20 minutes to go, and there's no letting up of the pressure. This little bounce that we had, is it even going to hold? It's already starting to sell off. Now we're again just, 20 points off the lowest levels of the day. So no real buying action, and 20 more minutes to go. That can be a long time from the bulls' perspective. Anshul, hi, good afternoon. Surabhi here. Good to talk to you after a gap. So I just want to drill on the consumer point a little more. Consumer durables we've spoken of, but you like other sections within consumer as well, right? And that's where the debate is, because after the earnings season, there's a lot of commentary around how the consumer is slowing down. It was already evident in, let's say, two-wheelers, for instance, rural demand, but maybe even the urban discretionary part could take a hit, because let's face it, prices, whether it's hotels, it's, eating out, it's flying around, buying anything, everything's more expensive now. So are you still optimistic on the consumer sector?
Surabhi, good to see you back on TV, and good to be speaking with you after long. Pleasure. So on these segments, clearly there has been in the last year commodity price pressures, as also general demand-based pressures, and which is why some of these segments, because they are long gestation, say hotels. If you conceive a hotel today, it's going to take you 3 years to 4 years, as that is considering you get land to set up a hotel. And so these are long gestation projects, and supply comes in over a period of time. But demand is as we speak, and which is why the cycle has legs. And our belief is that some of these segments will have legs on earnings, which is why you won't see wherever you have earnings visibility, you won't see material price action on the adverse side. On FMCG in particular, if you look at some of these FMCG companies and the impact of commodity price inflation, as much as 5 to 10% of their gross margins have been shaved off because of commodity prices going up. Now, commodity prices have started coming down. Now, that will add to their gross margins. In the meantime, these companies have done really nothing. They have been complete laggards since COVID, and which offers an interesting opportunity in these pockets going forward. And so our belief is that there is, while there were inflationary pressures and prices have gone up, but the demand remains so strong that, of course, near term, no one can tell, but 1, 2, 3 years, India is the market to buy, and there are enough pockets to make money in India. I'm actually spoiled for choice.
That's optimistic and the way to look at things, right? Anshul, I mean, prices are off, and you look for opportunities in what is coming off. That's always the thing to do, because you can do it at your pace, right? When markets are going up, repeated 2021, you're chasing, you don't have time, right? Before you blink, stocks are up. And that's an extremely hard thing. That's not the situation we have now. 270, 280 points lower, 17,550 or so is where we're at. Anshul, it's always a good chat. Thank you very much for your time. Appreciate it very much here on CNBC TV18. We'll take a break here. As always, we'll get you what dealing rooms are talking about in D Street Chatter.